How you doing, everyone? I'm Roger Herring, founder of Investors Accounting LLC, and welcome to this week's edition of Ask Roger. This week we have a question that came via Facebook from Portia. She asks, what tax strategy is most powerful for seller financing for the owner? Okay, this is a combination tax and legal question. Legal-wise, different states allow different methods. So check with your state and see which methods are available. Some states I don't think allow agreement for deed, that type of thing. So what strategy? I prefer to use a wraparound mortgage or a traditional seller finance mortgage, but I also want to do a lease option. First off, why do I want to do a lease option? I want to make sure that I have a 1-year holding period. That way the sale of this property is not going to be ordinary income. It's going to be a capital gain. The beautiful thing about the lease option is this is going to give you the ability to see how that client or tenant per se is going to pay the bills. If they don't pay, they've broken the option, they lose their option fee. The beautiful thing about a non-refundable option fee is it is not taxable until one of two things happens. It either has to expire or has to be exercised. Until then, that's money in your pocket. And hey, let's say that they got to the end of the option period. They can't buy yet. Guess what? Just renew it. Now, I'm going to do a wraparound mortgage. I would never do a subject to when I am selling a property. Okay, I want control of the deal. I'm going to become the bank. I'm going to put the property taxes and the insurance as escrows in this. But here's the thing that I'm really going to have some fun with. You see, this is going to have an interest component for interest income, and it's going to have a capital gain component. Now, which is more taxed? Capital gain? No, that's either 15 or 20%. Interest is ordinary income. So, what does my buyer really care about? Unfortunately, here in the United States, people just want to know how much is the note. Well, this gives us the ability to play with the interest rate versus the sales price, because now we can drop the interest rate, raise the sales price. We have the same payment for our buyer, but you have a smaller interest income and a higher capital gain income. All right, I hope that answers your question, Portia. I love wraparounds. If you want to get in on the Ask Roger, all you have to do is message us at info@investorsaccounting.com. You can shoot us a message on Facebook or just put a comment here in the video. Until the next time, Roger at Investors Accounting saying, Roger out.